you doing? How's the week been? Bit quiet my end, I've got to say. Not a lot going on as far as my moustache looks crooked. Sorry about that. It's doing a little bit of grooming. Yes, I know I need a lot of it. It's cool. It's part of being a farmer, I suppose. Guys, welcome aboard. It's wonderful to have you here as always. And okay, got the message, Angel. Yep. Yes, and let's hope we can find something interesting in the markets today to, if not get us some money, at least tweak our interest. As I said, I've had a pretty quiet week so far. A lot of orders in the market and two entries, break-even trades. That's about it thus far. So I haven't got anything to show for my labours this week. Let's hope that can change today. All right, let's go immediately to the breakout trade. And those of you who aren't aware of what we do here, it's all about trading the last 3 bars. In this case, got a few ways to trade this. And at the moment, believe it or not, we've chosen to go back to my system, which has given us break-even trades basically this week. Yesterday was no exception. We got into the market here, and our first take profit was here. We took that no problem, hit the monthly pivot, went whoosh straight back to the daily, took our trailing stop. So again, a break-even trade. Had you traded the optimized version, which of course has been using a 5-bar range, 1-hour candles, the last 5 bars prior to London Open, it was the same trade yesterday, basically, with just the addition of 3 pips to the high side, high Paul P, and 2 pips to the low side in terms of the entry and stop loss. It would have been a winner in monthly pivots from here on the optimized version. So you would have collected your cash there. Interesting. It's had 2 winners this week, one of them very small, I might add, but I've only had 2 break even. So computer's winning. Maybe that's that's because I changed, right? I changed from the computer version to mine. Oh, you got to love trading. You just got to love it. They're watching. They are definitely watching. Okay, so today, what have we got? We've got 3 1-hour bars, 1, 2, 3. Let's call it the range here. That's the low of the range. That's the high of the range. So we'll be going in long above that bar. We'll be going in short below that bar. And we do have some room, a little bit of room there to the downside anyway. Let's put in some levels, and I think we're ready to go, actually. We'll be trading short at 1.3924. So I'll put that up on the screen. 1.3924 will be the short entry. This is for my system. You guys who are in need to go 2 pips below that for 1, 2, 3, 4, 5. Yeah, it's the same range. For the optimized version, the stop loss will be, it's not going to tell me. I'll have to go out there. Stop loss is going to be above that candle rounded up, so 1.3944. That makes the calculations very easy. 3944. And TP1 will be half of the risk that we take. So there's 20 pips of risk there. Let's go 10 pips below that. So 1.3914 will be our first take profit. And our second take profit will be double the risk. That'll be 40 pips. So it'll be 16 below 39, which is 1.3884, right? There you go. That is the short order. I'll put that down there so it's a little bit more obvious. The long, that will be, as I said, above the bar, the current bar, which has a high, who? 1.39, whoops, wrong candle. 1.3954 will be the entry for the long, and 3.3 will be the stop loss. 5, 4, and 3, 3. Can I remember that? 1.3954 and 1.3933. Okay, so that makes a risk of 21 pips. So our first take profit will be 10. So 1.3964 will be our first TP. And our second TP will be double the risk, which was what? 21, so 42. It'll be 1.3996. It's got a ring to it, though, doesn't it? Kind of has. Can't see it. There we go. So there's the long, there's the short, and let's put those in the market, shall we? Now, those of you who are here for the first time, you can't see my shared. Oh, sorry. I was too busy doing things to look at the chat. Sorry, guys. Thank you, Angel, and thank you, MD. Righto. So I'll place the order, then I'll come back and describe it quickly for those of you here for the first time. This is a test, right? It's a beta test. This is not a proven system to trade and make money from. So what you need to do is take that into strong consideration. And when you do that, take it into consideration, I mean, you will please put no meaningful money on the table here. It's micro lots only. And if anything, nothing's better at the moment because we're just testing it, right? Seeing which way is the best way to do it, if there is a best way to do it. So let's go with the, what is this, the sell? No, this is the buy. Okay, so the buy is 1.3954. This is an OCO trade, by the way. One cancels the other. So if the short is triggered, we cancel the long. If the long is triggered, we cancel the short. Stop loss is 1.3933. Okay, so we can put that in the market. There we go. Stop loss underneath that candle. You can't see the entry, but it's right above it. The short, let's put that in the market. Sell stop at 1.3924. And the stop loss is at 1.3944. Okay, so they're both in the market. You can see the stop loss for the short is above this bar. Stop loss for the long is above this bar. This is a terrible combination of bars, high test, low test. Hi, Lewis. How you doing, mate? Yeah, something I don't like to trade. I call it the cactus because it's got prickly spines on it and they hurt. Well, they can hurt, not necessarily. Righto, let's put in some take profit levels so that we're not guessing. The TP1 for the long is 3964. TP1 for the short is 3914, which is pretty much there. That's close enough. TP1 for the long is 1.3964, which is around about there. Or it won't worry about TP2 at this stage because we don't know if we're going short or long. Again, if the long gets triggered, we cancel the short. Short gets triggered, we cancel the long. The object of the exercise is to catch the breakout of the previous session, basically, or the day sometimes. If you're trading 5 bars, as is the case for the optimized version. If you want to know what the optimized version is, I see there are a few people here who probably haven't been exposed to our way of doing this before. The optimized version suggests that we use the last 5 1-hour candles, so 1, 2, 3, 4, 5, as the range. Today, that's exactly the same. So the low is still the same, the high is still the same of that 5-bar range. The difference is you enter 3 pips above the high of the bar, or the range, sorry, and 2 pips below the low of the range. This is the optimized version, right? The difference thereafter is you take your profit all profit. There's no TP1, no TP2. You take everything off the table at first resistance or support, whichever way you're going. So in this case, that's obvious. It's the monthly pivot for the short, DR1 for the long. Now, it's a terrible reward to risk. There's no question about that, because you're risking, you've got to go 3 pips above there. So actually, I can't call that DR1. You'd have to go to another level because you bang on it. That's where you're getting into the market. I'd say I'd go with 1.3983 as your optimized version for your target, right? So it's a target only. It's not a TP1, it's a target. Rightio, that is the pound trade for today. We're short under here. We're long above here. Now, I want to address something and just have a look and see if Huret's in the room. Yep, sure is. He's going to have a chat to us later about a few things, and I'm actually curious to know what they are going to be at this stage. Let's see how that pans out. But we'll address this later. He asked the question yesterday about Euro Yen, and he was in a long Euro Yen, and we suggested that it would have been a great time to take profit because we had a big bearish engulfing bar, and we were at the top of a range that was potentially about to go back to the low side. Look what happened. Look what's happened today. Bang, away she goes. So I'm going to question him, of course, on that. Is he still in that trade? And we gave him a few options as to, or our opinion. I mean, there's, not our trade, but gave him a few options as to what we would do at that point. Let's see how we handle it. That'd be good. Nice. You're right. Nice. That sounds good. Trades that I was looking to take yesterday. Pound Aussie was one. I've still got that in the market, actually. It's a long above here. I don't suggest that now is a great time to be leaving that in the market, but I'm still of the opinion that we can go long here. So whilst ever I am of that opinion, I probably will leave it in the market, but I'll certainly be looking for a better entry today, without question. Now, the Aussie seems to have put on a bit of gas, actually. Not sure why, but does seem to have put on a bit of gas against the dollar. The dollar's coming off a little bit. That's true. But the pound doesn't seem to be benefiting from that too much. As you can see, it didn't even reach a resistance level here and came off. So very, very, as the Japanese would say, this seems to be rising in agony at the moment. Not sure why. Ash probably tell us a little bit more about the pound while he's here now. G'day, buddy.
Hello, mate. Hello.
How's every little thing?
Oh, every little thing is magic.
That sounds like a song.
Yeah, don't want to get banned, but yeah, it does sound like a song. Yeah, the pound, yeah, the dollar has come off. The stimulus package has been put in. A little bit of inflation yesterday, which I thought was a really, quite a. The devil was definitely in the detail. I thought it was quite an interesting report on the inflation, actually, because what we saw was energy prices dragging the CPI numbers up. But actually, when you exclude the energy prices, then inflation wasn't quite as pronounced as I think many are suspecting it will do eventually. It was when you sort of like looked at the core CPI, which does deduct those things, wasn't quite as high as they thought. But we did see a boost in gold. We saw a boost in silver. As you say, the dollar came off a little bit, and that saw particularly gold and silver go higher. I think it's probably more to do with stimulus than anything else, if I'm honest, mate. I'm not sure whether that CPI data would have been enough to drag gold and silver higher, and I'm interested in both of them, but I don't think the inflation picture is that pronounced as yet, and I also wonder whether the dollar might start to get a little bit of traction relatively soon. Interesting what you're saying about the pound. It hasn't been quite as strong as many of the other performers, but it is now
No.
above the monthly pivot. And it was the monthly pivot that I thought would halt the climb of the pound, and now it's through that level. As you say, it is struggling to really extend its legs. But by the same token, it is still extending its legs. So I think it's more of a dollar story than anything else. If you look around the grounds with the pound, then we are seeing the euro is up against the pound, so that would suggest a bit of weakness. The pound is very much down against the Aussie. Very much down against the CAD, down against the Swissy. So the pound is the second worst performer really after the dollar, and not that surprising in many respects. I think I also thought that the Canadian Bank of Canada's report yesterday was another one of interest, and not because there was anything particularly notable, but really because there was nothing notable. And what you're really kind of seeing now is a situation where who's gonna move? Which of these central banks is going to move? And we're probably likely to see the pound come off because it is at such a high. That the pound has had such a good rally that the short is, certainly on an intraday basis, probably quite attractive. But I don't think we're going to get any big moves. I think we're going to get trapped in ranges here, and I think a little bit of profit taking with things like the pound is probably the state of play. We are kind of entering into that sleepy period in markets where we do hit the ranges, in week 2 and 3. So yeah, I mean, I'd be bearish the pound. The COT data suggests going short the pound. The seasonality suggests going short the pound. But I'd probably want to play it on an intraday basis, and I think it's more than achievable to do that. As you say, it hasn't turned against the dollar. It's definitely turned against the Aussie. Now, the opportunity to trade that.
Yes, not happy with that. I wanted. Well, I'm not in the trade, so it doesn't matter. But
yeah, I know what you mean, mate. Because actually, the Aussie was always the strongest, of the currencies, and it's still pretty good. So if we're going to trade the pound short, then it does make the most sense. But that's moved.
It does, yeah,
in quite a protracted manner. So I would have thought around about 18. 1.8 with the pound Aussie looks like a pretty good place to go short. But it's got to get through. The monthly pivot now. It's got to get through the weekly pivot now, and is it likely to come back up to that area? Maybe not, but by the same token, we're just about an area of support now as well. So going short here, and actually or at the monthly pivot doesn't look that palatable a prospect in my opinion. So I'm with you on the short. But I don't know whether they're going to get the price. And what that says to me is that if we're looking for shorts in the pound, we're going to have to trade it against something else. But you look at the CAD. If you look at the pound CAD is negative today, but it's about 10
use your
pips
charts,
away.
Mate, because I haven't got those up.
Sorry, buddy. Let me.
No, you're right. Up. No drama.
Make this clean. There we go. Right. We just flip our. Here we go. So this is the pound CAD, and you look at it on a 4-hour, and really, what have we got going on here? It looks like a potential inverted head and shoulders, possibly, but I think significantly we are closing in on a support level. So anybody that likes the pound will be looking at a long here, and considering, as I say, the situation we're in with these currencies now, where there's no real commitment to change anything. Would the pound go into a downtrend at this point? I don't think it would. I think it's much more likely to get kind of caught in some sort of range, particularly against the CAD. I mean, it has broken to the low side against the Aussie, and you look at it here against the Swissy. Are we also getting relatively close to a level of support? It's probably going to get held up there. So until it breaks these levels, we don't really have a reason to go short on the pound on a longer term basis. This is on the daily, and we're definitely seeing that we're getting close to an area where the pound could potentially reverse. This is now the weekly, and the pound could potentially reverse. I mean, who knows where? Might even pop up to that level first. It's got a little bit more room before we see a downdraft. But even if we do, I think it could be still a buy the dip scenario with this stuff. I mean, it's not really supported here, which means that a move to the downside could be quite violent. But there's no real catalyst at this point. So I wouldn't be that comfortable calling the pound. I wouldn't be that comfortable calling it short against some of these. I think on an intraday basis that's a completely different picture, but not yet. Gold and silver, both of them I think are now attractive enough to start looking for upside. Silver's had a decent bounce from the lows. It's just hitting a little bit of an area here. Let's bring this in with some pivots.
We had Ainsley in yesterday, of course, and I know she's already in.
Yeah. Yeah. Yeah, I mean, I've got some trades on silver and gold as well, and now it's time to kind of start playing this one. Start playing it and enjoying the move. But I'd quite like it. Look at that. That looks like a really good level around about that daily pivot. Whether it comes back there straight away, I'm not so sure. It might even just get up to this point here first, 26.85. It might just get up to that point and then start coming back. But around about the $26 looks like a really attractive area for silver. When it comes down to gold, again, the daily pivot looks like a great place, and we might be just hitting a little bit of resistance here now. And it is how you read that CPI, because as I say, I don't think the CPI was all that significant. It was suggesting that inflation was there, but it wasn't in a situation where you'd start to panic, and that's where we'd see gold and silver really start to pick up pace. So I still think that there's a buy the dip scenario, and I still think we're going to get the dips more significantly. So around about that 1720 looks good to me, and buying it down to 1710. I think I put a message in the broadcast group about that, which I might readjust. So 1720 to start with, and then 1710, for further scaling, I think looks pretty good with gold. So I like them both, mate. I like them both. Gold and silver is really, I think, the best play right now. They're the cleanest things that I can see. Thank you, Lewis. Thank you, mate.
So do you trade both?
Yes.
Is that the way to go?
Yes, you do.
Aggregate your risk?
Yeah. I mean, you would have to. I mean, I think
is it the same trade.
Yes, it is. Yes, it is. And this is the reason. I think we've talked about this before, but if we bring this up on a calculator, what we're looking at is the gold silver ratio, because this is an important aspect of whether we buy gold or whether we buy silver or whether we buy both. And what we want to do is just put in the numbers. So if we sort of like look at gold at 1736 and we divide that by 2635, 2640, let's say. This is in the band where you buy them both. And you're kind of looking at the extreme. So the extreme levels of the band are, when the gold and silver ratio pushes 80, then you're really looking to buy silver. And if it comes down to around about 50, you're looking to buy gold. And this is kind of bang in the middle. So because it's bang in the middle, it suggests that they're both at fair value with each other. So you do buy them both. Yeah.
Okay, cool.
Yeah. That's the way I would personally play it. When they get out of kilt, what often happens is when they get out of kilt is that gold and silver traders will sell they'll almost trade it like a currency pair, where they will sell their gold positions for silver. when gold gets overvalued in that kind of in that range, and if the reverse happens, they will sell their gold position. Sorry, they will sell their silver positions for gold. I think I said that different each time, but yeah, you're basically looking at that. Yeah, that ratio, but that suggests that that both of them should be played. In many respects, I prefer silver, but gold as a store of value, is undeniable. So we should be looking at that. Notice Bitcoin has come off a little bit, and we did see equities jump as well. So with equities, we're seeing equities extend their way to the upside. Okay, it's a little bit cool so far today, but the trend, really, as scruffy as it is, has been going higher. Yes, again, we're at a level of potential resistance here, but the stimulus package is interesting, isn't it? Because it's what we were talking about yesterday. These things eventually just get priced in, and I suspect it has been priced in. We've all been waiting for it, and now it's here. So now that's been priced into to the move. What happens next? The Nasdaq is still fascinating. I was looking at the Nasdaq and thinking, okay, well, if I want to go short on the Nasdaq, I want to take this trend line, and we're not that far away from it. If on top of it already, we might well be on top of it already. This might be here. In fact, let's tighten it up to there. We might be there. It's a little. There's not enough defined touches here to say that it's this point. So we might have to go to the highest of the touches just to get a bit more clarity, and that would look pretty good for a short when you think about it, because you'll also run into this previous level of resistance. So there is a case to be made for the Nasdaq around about 1300. Nice round number as well for a short. The picture doesn't support that, and we've got to continue to go back to those bond yields. Bond purchasing yesterday, there was an auction yesterday that went off at 152. So the yield has come off a little bit, from the 160 area. But there is potentially some support at 140. So we might only get a little bit of upside with these stocks. We might get a bit of upside with gold before it hits that 140. But when it hits 140, I wonder whether it can turn around again. Nasdaq's going to look like a potential to make a reversal pattern around about the monthly pivot, because that's going to give us the start possibly of an inverted head and shoulders with a neckline. And the neckline, there's two areas that that I'd be looking for a potential short in the Nasdaq. Not that I would play the short, but for the positions to reverse if I was if I got into a long. And the one would be at 1300, but the next one would be here around about the 13130, because that might well come back down again, and people would be looking for the inverted head and shoulders. Whether it goes there, and holds to that would be the other question. But you can see the left shoulder there, so the right shoulder might come into this place. So I'd be looking for something like that, mate. I mean, I look for them all the time, and they don't always work out. But when I look at a chart, that's the first thing my eye gets drawn to. Where's the neckline? Whether that is but makes the right shoulder is not really the relevant aspect, because the neckline is still resistance potentially, and you can see the monthly.
It's the crucial level, isn't it? Really, it's the let's call it the line in the sand where we cross from. Well, in our opinion, or maybe not even relevant in some cases, but I think you and I are very similar in that we're looking always for reversals.
Yes.
And that neckline is super important to you and I.
Yeah. Yeah.
In particular, if we break it and bounce off it or retest it. But, in your case, and I like the way you do that, it's to trade once the neckline is bounced off, for want of a better word, once it becomes resistance in this case, and then gives you a higher low.
Yeah,
that's what I like to see.
Yeah, or the pattern that I want. If it creates that inverted head and shoulders, and I believe in the trade, then I'd like to take it around about that right shoulder area. Should we bring Jira in, mate? Should we get on with that, or have you got anything else you wanted to look at?
Yeah, look, I better do just a quick whip around before we do, just to get it out there. because I haven't done that yet.
Yep.
So let's go from the top to the bottom. Where I started the week was looking for Euro Aussie long, and that's happened. Not, but I don't. Just because it doesn't happen in the first few days of the week doesn't mean that it isn't going to happen. So I'm still of the opinion that if we get a signal to go long, I'll still want to go long. But the reason I really wanted to go long was to trade the range bottom to top, and that doesn't seem to have been the case. If I refresh my memory, however, my memory tells me that we're right at the bottom of that ascending channel.
Which one are we looking at, mate?
And that's why. Oh, this is Euro Aussie, mate.
Euro Aussie.
But we're looking at your screen. Sorry,
That's
I
okay.
better take over, Sheldon.
Yeah. Okay.
There we go. So that's the reason I was keen to find a long, and I haven't given up on that. This is a monthly chart we're looking at, right? And until that low gets taken out from the previous month, then I'm still thinking that we've got bounce territory here. Pardon me. The trend line that you see there is probably more relevant to a daily chart than a weekly, but the weekly is telling me that we still haven't closed below this horizontal level. And until that's the case, and of course that won't happen until Friday or Monday, I still see these two big buying bars here, which are really making a statement to me. Where on this chart can you see two bars bigger than that at a crucial level?
We got a screen of download. It says download now. AVS for you.
Really?
Yeah.
Okay. Let's try that one then.
There we go.
Anything else interesting on there?
Something to do with them hiring the mob to do a job. I don't know what
that was. I'm not having a great time with this technology today.
Yeah.
So let's go back to there, and I'll very, very quickly reiterate what I was saying. Until that low's taken out, and this is a monthly chart, then I'm still thinking there will be a bounce here of some kind. Where it goes to, I really don't know. If it were to go up to here, I'd like to be part of that, frankly, and that's why I like these type of scenarios. And the weekly chart's telling me that we haven't yet cleared this level here, the horizontal level. And it's a beautiful confluence there, in my opinion. That bar there is telling me something. And if I look at the daily chart, it's even more pronounced. Big bullish engulfing, big follow through, hit the resistance, actually closed above the resistance, which was form of support. Now we've come back, gone into consolidation. I'm baying on a higher low here. And if this bar were to retrace, this is the daily chart, back into itself, and I've got a low test bar there, gee whiz, I'd find it very difficult not to take that trade tomorrow long on Euro Aussie. So that's where I started the week, and nothing much has changed. Pound Aussie, we've already spoken about, looking to go long. I haven't changed that order. Ash is of the opinion this is going short. And look, I totally get that, because that is, I'll call it conventional wisdom, because everything from a fundamental viewpoint right now is pointing in that direction. That doesn't bother me at all, because everything from a technical viewpoint, in my mind, is pointing in the opposite direction. So I've got a reversal. I've got higher high, higher low, higher high, higher low. That is a higher high, which is why I'm trading it. And as yet, we haven't hit that higher low. So that would be the one to trade for me. And that's what I was just talking about. So a higher low here really does get me interested. And I would change my entry from where it is now to down here. But it's got to be right before I do that. Otherwise, I'm not interested. The third on the list also was a buy, Euro Kiwi. Now you can see why I'm not making any money this week so far, guys, because I haven't been in the market. Everything's just drifted away. And am I as keen on this? Well, look where we are. We're at a nice support level. This could be construed as an inverted head and shoulders. That's a daily, a 4-hour chart that we've got here. Maybe this is the right shoulder forming now. I don't know about that, but let's try and put that into perspective. So we're looking at something like that. Doesn't look too dusty to me. So if we were to hit that level, and maybe we have, or as good as damn, very, very close. Again, with the higher low, I'll be looking to trade this long. And again, you've got those two big bullish bars. And again, I ask you the question, where on this chart can you see two bars together as strong as those? And I can't. Maybe last time I saw it was here. And look what happened next. Higher low, away we go. I'll be looking at the very same thing to happen again on Euro Kiwi. They were 3 of the 4 that I was looking at. Euro Pound is the other, and exactly the same applies. I was looking for a higher low based on the tweezer bottom sitting here. That's maybe underway, but gee whiz, it's taken a long time to form. You know, we've got 3 days of nothingness here really at the end of the day. Right now, if I look at that 4-hour chart, I've got a potential trade, but we've got an issue in that in what, 4 hours time, we've got an ECB press conference and statement. So it makes it really tough to get a position here. If I were to see a retest, take this higher and a retest here prior to the, in a way, I haven't got time. That's the problem. I haven't got time on the 4-hour chart. And trading on the smaller time frames in an environment like this where you do have a press conference coming up, which is likely to do anything unless you get safe in the market very quickly, and not even that. Trading prior to now, at this time, as close to the announcement or press conferences as we are, trading at this time is fraught with danger on a small time frame because you're going to have differing opinions, and they're going to try and get a little position before that announcement's made or before the press conference is made. Right now, you're seeing a very strong case for the upside. So somebody's seeing that the pound's a little bit weak, probably seeing potential, I don't know, tapering maybe in the Eurozone. I don't know what they're thinking that the ECB is going to do, no idea. But at the moment, we're seeing a little bit of that buying coming in on the euro, and that's where I want to be. But it's very, very dangerous at this time to do so. In particular, you know, if you're trading a big bar, you're asking for trouble on small time frames, I believe, coming up to that announcement. So that's probably a summary of where I'm at. I did think about Kiwi Yen and Euro Yen this morning with a potential false break either way. But I was thinking up here, down here, retest short more than anything because we're at the top of the range. That hasn't happened. And I can hear Euro laughing or chuckling in the background. Good on him. I hope he's got some good money out of that. And his target's a long way from now. And the other one I was looking at was Kiwi Yen, exactly the same thing I was looking for. And it's done exactly it's done one of the possibilities, of course. The possibility was that we come back underneath here, retest, or break here, come back above and retest. It hasn't done either of those things. It's just gone straight up. So there's not a lot for me to do here, and really nothing's changed. If I don't take another trade before the end of the week, it wouldn't surprise me. But who knows? Anything can happen from here. Okay, so sorry about the wrong screen, guys. Eventually we got there. I think the market is probably slipping away from me as we speak, but you know, the further it goes away from what I intended to do, guess what? It gives me a better price, and that's what I'll be looking for in the next 24 hours or so. I might even look at the charts tomorrow. I think I've got a bit of a chance to do so. Right, Ash, that's me. Nothing really exciting. I don't know what the pound's done. Let's have a look at that.
Yeah, no worries. Oh, actually, mate, if you're around on Friday, maybe we could fix up the pound Excel spreadsheet and get that done.
Okay, I've got to say this doesn't look good. It looks like we've been. Oh no, we wouldn't have been triggered short.
I just think it'd be really good to get this data down, just so we can start looking through it.
Absolutely.
Yeah. So if you're around Friday, mate, then I'll be around. Oh, tomorrow I'll be around, so we could do it then if you're available.
Around this time, maybe.
That'd be great.
We'll see.
Swee. Now, let me just quickly grab screen here because Swee's just brought in a suggestion, and I think she's absolutely right. And then we will get to Jira. Okay, so what Swee is saying is if we draw a fib, let me take these off. Whoop. We're going to draw a fib from the high here down to the low on the daily. And the 38% retracement could well hold the price action up if it comes back and tests that 38% retracement. So it's retracing up again. Now that 38% retracement looks like an area it could hold up, and what I really like about that number, it's around that 12,850 on the futures, is that look at this support line here. That's pretty good. There's one really good touch there. Bit scruffy there, but I like it. But the other thing about it is that when we look a little bit closer, very close to the daily pivot. So and you can see this high here. So yeah, I would agree with that, Sweet. I really like that. I think a long from there would be a decent place to go long. The one caveat would be that if it got to this trend line first, I would be not quite as interested, and I'll tell you that for the reason is that I think to be to get this trade safest, you would want the stops at this low down here. So it's around about 130 pips down. Now that gives you around about 150 up from that particular point, which is better than a 1-to-1. And at that point, you manage it in whichever way you choose. But that's why. And if you do manage to get on the daily pivot, it makes that risk reward even more attractive. It's around about a 110 down, and it would get you to around about 1800 up. So getting near to a 2-to-1. So yeah, I really like that. I think that's a really good. I think that's a really good approach. And I don't think that would be an issue at all. You definitely want to be able to get your signal within this bound, I would say, between the daily pivot and the 38% retracement to generate that long. If you didn't get it, if it was a little bit higher, it starts to diminish your risk to reward chance, and the probabilities would be about 50-50, and your risk to reward it just wouldn't be there. So as long as you've got that room to get back to that trend line, I'd say that trade looks pretty good. I like that. I think that's a good spot, and I may well even join you on that.
Mate, do you pay any heed to that market structure?
Yeah,
which I don't know what they call it even, but it's a descending, expanding wedge, let's call it.
Oh yeah, well this this is kind of the trumpet, isn't it?
Yes, in a downward fashion.
Yes.
It's not brilliant in any shape.
No,
but they tend to break to the upside, don't they?
Yeah. It's kind of. No, you're absolutely right. In actual fact, I wonder whether it is it's still a kind of broadening pattern, isn't it? Yeah, they do tend to break.
That's the word I was looking for. Yes.
Yeah, they do tend to break to the upside. I don't particularly like them. I mean, some people love them, but I'm not that keen on broadening patterns because it just can go on. You just don't know where it's going. But I think it's more the fact that if it does break to the upside, the move tends to be quite significant. With these things, because it's it is breaking out of something which is widening. So I suppose many people you might get a measured move on the broadest point. It probably make more sense to get it on the thinnest point of the pattern. But yeah, people do tend to use it as the broadest point, which could provide a lot of price action back to the top. You know, that takes you well beyond the highs there. Yeah, it takes you well beyond the highs up there. I think the if the pattern was drawn from the narrow area here, then that would probably take us back to the actual highs, which would probably be a bit better. I would have thought, you know, just to be a bit more conservative. Gets us near, doesn't it?
Okay. I've just seen it. I don't know. I've seen a few traders trade it, and I thought, well, okay, I wonder if you'd pay any attention to it.
I do. I pay attention to it, mate, but I don't personally. I don't really like them. It's not a pattern that I'm drawn to. You know, I'm always drawn to the head and shoulders, and I'm always drawn to wedges. But broadening patterns don't really jump out, I suppose, at me. Maybe that's the only reason. Maybe they just don't jump out at me. So I don't have experience in trading them successfully.
Not that I plan to use it or write it anytime soon, but I think on your gravestone there should be "Here lies Ash's head and shoulders," and the rest
of it. I like that, mate. Should we bring Jura in and have a chat?
I think we should. I think that's a good idea.
All right. Let's unmute. So there you go, Jura. I've just asked to unmute you. I think that's okay. Here we go.
Hello, everyone.
How are you, mate? You okay?
I'm good. I'm good.
Okay.
First question.
Yeah.
How do we pronounce your name? Who's right, who's wrong, or is anybody right?
Well, it depends. You want a British pronunciation or an American pronunciation?
What's your pronunciation?
Gyra. Yes, that's American. I usually use an American, which is Gyra.
Yeah. Gyra. Okay.
Yeah.
Gyra
then
is
from this
the
day
way
forward, you will be. Yes, that's how you'll be addressed from.
Do you know what, mate? Now I see the properly the way your name is spelled. The English pronunciation should be Gyra as well, because when you got the E 2 letters away from that I, you don't pronounce it I anymore. You do pronounce it I, so it should be Gyra. Okay, that's good.
Well, when I was living in Scotland, they call me Gyra.
Yeah, well, the Scots are different. You know, they've got their own way of doing things. So okay, Gyra,
let me share my screen. I don't think I have the power to share my screen.
Okay, all right.
Angel will sort that for you, I'm sure.
Yeah. Could you give Gyra power? I'm going to have to get used to this now.
Okay.
There we go. Okay.
Can you see my screen?
Yes.
Okay. So I'll just share the way I trade and my reasoning.
Yeah. Okay.
And then you can comment whether my reasoning is good or not. Right. What I usually do is I use the daily time frame as my spotting time frame, and then I use the higher time frames to confirm my bias.
Okay.
Directional bias, and then I use the lower time frame for entry.
Okay, sounds good.
So I saw this bar, you know, that is quite a good bar to buy, but when I saw it, I was too late. So I was around here when I saw it. So I was thinking, okay, is it worth to get in when and if it retraces, right? So you know, from the daily time frame, I can see that, you know, the bias is up, right? And this bar here is a strong low test bar, and it broke the weekly and both the weekly and monthly pivot, right? But I was too late. I was around here actually at that time. So I was thinking, is it worth it to enter using a buy limit when it comes down? So for me to do that, I would go to a higher time frame. So I start with a monthly time frame, and I saw this channel here. Well, first I did with a weekly. I saw this channel here, which I drew. And then the other thing that I add to, this is basically a wave rider strategy, but I modify it. Yep. What I do is I try to find the mean. So I look at the monthly time frame, and just about every pair I put a mean line, because I noticed that for forex pairs, when the price is far away from the mean, it will go back to the mean, right? And then whether when the sellers are too strong, all right, it will go down, and then when they are weak, the buyers will buy them up to the mean again. So I usually find a mean between the
Okay,
top
so
and the bottom. And
liking this so far, mate. So your mean is generated from taking the highest price, plus the lowest price divided by 2.
well, I
On the
don't
monthly
make
chart.
it.
Yeah.
I don't make it into such an accurate science. It's more like an art. I try to find, somewhere in the middle where I can get a lot of touches. Right.
Okay.
So it's roughly around that. Right. So when I look at this, and we are currently here, so that means there is some more room towards the mean.
Yeah.
So that sort of confirm my directional bias, and that is where I place my ultimate TP, my final TP.
Yeah.
Usually I just TP halfway before that, right? But that's just my ultimate, right?
Yeah.
So what I did was let me enlarge this. I put my stop loss below this bar, right?
Yeah.
And then I went to the 4-hour time frame to try to look for a good place to place my buy limit, right? So the markets was around here when I tried to set this up, and that was before it went into a range. So I put my entry here because roughly here is flush with the daily pivot, right? And I saw there's a support here around here. So I placed my entry here. So I got in when this bar came down here. All right.
Yeah.
So because with the higher time frame, I have my directional bias. So I'm not too worried that it will break the weekly pivot and go against me.
Yeah.
So that is why I had the confidence to place my entry here. Right. And my stop loss was way down, right? So it allows me to the to have the confidence as well as the space for the price to breathe, right? So and then what I usually do is I wait for the market to run for a while before I decide where to place my TP1, where I take half, right? So then this bar form, right? And that is usually how I also spot my uh, slingshot trade. I usually start with a wave rider, and then I look, hey, there's a slingshot opportunity here, all right? And usually what happens with slingshot is, the sellers push the price down, right? And then the buyer, that gives the potential energy for the buyers to push it up, all right? Form another bar, another high test bar. Sellers push it down. It gives the potential energy for the buyers to push it up. So this is the third touch, all right? So I said, well, this is a potential slingshot trade. So actually I place a slingshot entry here, right? But I cancel it because it was way beyond 6 bars. So, but the entry of my slingshot becomes my TP1 for my
Yeah.
wave rider,
The first
right?
trade. Yeah.
Yeah, because after the third touch, the sellers will push it down, and then the buyers will push it up, and I say that's a good place to get TP half. All right, so I was intending to take TP half here, but I canceled my slingshot because it was more than 6 bars. All right, so just now when I opened up, well, I had a good surprise. Well, it passed my uh, TP1 line. So I took my TP1, which is half, at around WR1.
Nice, mate.
Yeah. So I leave
Brilliant.
the other half to run. It will probably run to DR3 maybe before it comes down, or maybe it will come down now. but I move my stop loss to below the daily pivot, right? Right about here, right? So maybe it can go all the way up to the mean, all right? You know, if it may come down here and go up, right? So that's the way I think.
I think that's a really good system. I really like it. You know, now you explain it in detail, it makes a lot of sense. The only one thing I would say is if you did the calculation of the high to the low for the last 20 years, or you know, or at least a decade, then it would be interesting to know where that level actually is. You know, it does, because if that did give you the confluence, because what you might find is that your mean is is not quite right. You know, you might find that it could be a couple of pips below. If it's a couple of pips above, then you're in really good shape. But it'd be interesting to know what the actual numbers were, because it would just bring you just that little bit of extra confidence. I think that the fact that it's art, you know, you using it like an art is great, but a little bit of maths and science just added in there would be fantastic. I think that would be a really good way to play it. But I think that's brilliant. I like that system, and I love the analysis. I think it's really good, mate. And I like the use of all the time frames. That's the thing that really stands out for me.
The thing I like about it more than anything is that you've actually thought about it, and I find it really interesting that you've gone from the daily up a time frame or two. Normally, that would be done in the opposite direction. So, yes, in other words, you would go with the bigger time frame first, then come back to the smaller. I think that's brilliant. I want to try it myself.
Yeah. Really like that.
Just to see. Where did you drag that one out from, Jara? It's just something that made sense to you?
Yeah, because I've been trading the Wave Rider and your slingshot, Jeff. So I was thinking, why don't I incorporate some of the good elements from both into my thinking?
Okay, so you got comfortable with the daily chart then?
Yeah, well, I use the daily chart to spot opportunities, right? And then I use the higher time frame to confirm my directional buyers, and I use the lower time frame for entry because I want to get a better deal.
Sure.
Yeah.
I think you should give yourself a big pat on the back because you are using all those elements, but you're not relying on any single one of them.
Yes.
And you do this every time, Jara?
Well, I started this late last year, so I'm sort of forward testing. So all my trades are just 0.25%.
Yeah. Okay.
Yeah.
Okay.
There's nothing wrong with that, mate.
No, not at all. Not at all. So you're making you've put it all in a spreadsheet and just you're logging everything.
Yeah, I journal it, and it has been profitable so far.
Sounds brilliant, mate. So, is it one of those things? You are how many trades in are we so far?
Well, it's not often that you get this opportunity. Let me share with you my Aussie Kiwi. The Aussie Kiwi, I didn't make that much of a profit. My reasoning, okay, Aussie Kiwi was slightly different. Aussie Kiwi, I was just looking around and I actually saw an opportunity at the hourly time frame. Let me see this. Okay. All right. So I just happened to see an opportunity because I was still trading the Wave Rider. So I was looking at the hourly, and super trend is up and the daily pivot is up. And again, I was too late because the green bar was already quite high. So I asked myself again, if this is going up, then when it retraces, I want to get an opportunity to enter, right? So I went to the higher time frame. I did the same thing. Let me share this. So I was looking at it, and the mean is way up, and not only that, there is actually a range here, and we had hit the bottom of the range. And then I'm thinking, well, it may go up here to the top of the range, right? Even if it doesn't hit the mean, then it may just go up to the top of the range. And so I say to myself, well, this I can trade this up then, right? So I go back to the lower time frame. So I put an entry. It was around here actually. It was around here. I put an entry around here so that I could get in with a buy limit when it comes back. And I put my stop loss below this bar. This is a very strange and interesting high test bar. So I put it below this bar. And so I think that will probably be quite safe. And what I did was it did trigger the entry. And then it went into its own small range here. All right. So that is why I asked Jeff and you yesterday whether this is gonna go up or down, right? I also saw this was interesting. I also saw a slingshot opportunity here for entry with a seller bar here, but it didn't trigger after 6 bars, so I cancel it. There was also another slingshot opportunity at a H4 level here. It was also, it didn't trigger after 6 bars, so I cancel it. So I was thinking, well, this is going nowhere. It's not going up. It's not really going down. So it was around here, and I closed the entire trade. So that was my reasoning.
Do you know what's your target on the Euro Yen?
Euro Yen. Okay, let's go back there. My target for Euro Yen in terms of final TP was here.
Okay. Yeah.
Right. Close or below the mean, below the mean. Yeah.
Yeah.
But that is my final target.
Okay.
I already took my TP1. I took my TP1, which is where I took half off, right about DR1 just now.
Okay, I've just done a quick calculation of the mean on Euro Yen. So I've taken 170 as the high. I've taken round numbers. I haven't put the little ones in. 170 is the high, and 93 I think is the low, and it brings us out at 132. So might be worth being aware of that. I think you're pretty close.
Mine is different though. Mine low is about 88.55, and my high is about 170.
88.55. Oh, you're going back to 1998. Okay, I've taken from the last 20 years, so the most recent low. But yeah, that makes sense, mate. Yeah, it makes sense to go back to that one as well, I suppose.
Yeah. Well, I take whatever is available on my MT4.
Yeah, well, do you know what? I mean, it's interesting actually which one you take. The most recent high and the most recent low might be better, just because it is the most recent data. Because otherwise we could be going back, a crazy amount of time, and that does still cover the last 20. I mean, it's the last 10 years, really, isn't it? So you might be better there, just to give you a little bit more of a conservative price target. Because it looks to me like you're in the area, but if you aim for that 133.40 and it's actually at 132, you've got a really good trade that you haven't managed to take profit on.
Okay.
Yeah, so it might be worth taking the most recent, but I think this system is brilliant. I really like it. And in actual fact, what you could do is leave your target where it is, but note down on your journal, the different permutations of taking the most recent high to the most recent low over the last 20 years, and then you're really starting to kind of refine it.
You know, it's something, Jira, that you found, and I'm not sure when you discovered it, but it's something that most traders actually have locked into their psyche, but actually never ever
Yeah,
voice.
yeah,
And it is that price, as soon as it gets oversold, comes back
yeah,
to where it actually belongs, which is
yeah.
in that mean zone. When did you first understand that that was usable?
Uh, well, after trading Wave Rider and Slingshot for quite some time, and after making losses, I don't make a lot of losses because every time I trade, I just use 1/4%. Then I realized, price go up, go down, go up, go down. Why don't I just use the middle or the mean as sort of a guide?
Mm,
Perfect. I love
yeah,
it.
yeah. Because
Yeah.
in actual
It's
fact,
so obvious, isn't it?
yeah, it
Yeah.
is. And when it comes down to currencies, they're much more likely to do that because
Yes. Yes.
Well, that's what I'm saying. It's
yeah,
not relevant to well, to a lot of indices.
no,
Certainly not the stock market,
no,
because they
Yeah.
just keep getting
Yeah.
higher and higher, right?
yeah,
But
Yeah.
yeah,
to
Yeah.
currencies,
Exactly.
they've got a perceived value,
Yeah.
high and
I.
low,
Yeah.
and once they've reached that,
Yeah. Exactly. I also realized that because I had more years of experience in trading stock, and stocks tends to go up because stocks are businesses, and
yeah.
businesses that generate revenue, gross profit, net profit, and their value increase over time. But currencies are they are medium of exchange. Yeah, they're used for exchanges, and you know
so
no
far,
country, yeah, no countries will want their currency to be too high or too low for
Absolutely
international
right.
trade. Yeah.
Well, and the
So
other thing is about stocks is stocks inflate, but currencies deflate. So you're effectively getting less and less for your fiat currency, whereas with
mm,
stocks, as you quite rightly say, you're looking for them to return more and more.
mm,
So yeah, it is a completely different. It needs to have a completely different approach. But the reversion to the mean is a probably it's probably the best way to trade currencies.
mhm.
I mean, if you kind of if you can see that the euro yen is far away from its mean and
Yeah.
it's at an extreme level, then to be ready to look for a reversal.
Yeah, exactly. Yeah, you see, it goes down here, it's two way down, and then it goes up, it
Mm,
goes down.
mm,
it's
really
kind of what
interesting.
we're trying to do every day.
Yeah,
Find those little reversal patterns
Mm,
as
yeah.
going back towards the middle. But we confuse ourselves because the market just gets so strong in one direction and it goes for so long in one direction. You think, oh my God, this can't turn around.
yeah,
It
yeah,
will. It
yeah.
will.
Yeah, because they're all doing the same thing, aren't they? When you sort of like think about
Mhm.
quantitative easing and stimulus, that they're all trying to stimulate their economies, and they're all using pretty much the same tools. So inevitably, they come back because that's how trade will continue to exist. Otherwise, if you have one currency which is too inflated, then effectively their economy shuts down because they're not competitive anymore, and then woe behold, their currency starts to weaken. So
Yeah.
it's kind of an
If you're a net,
obvious equation.
if you're a net, if you're a net importer, you want your currency to be strong. If you're a net exporter, you want your currency to be weak. It's not
Yeah,
rocket science, is it?
yeah. Thank you, Helen. That's very kind. We're 9:10. I think we got the next show coming up, mate. So we better get out of here.
Oh, that's right. We're on a time limit these days.
Yeah, we're on a time limit.
Goodness me. Okay.
No bad thing. Jira, thank you
That's
so much
probably
for
a
that,
good
mate.
thing.
Jira, sorry. Thank you so
Yeah,
much for that.
Jira, thank
You're
you, mate.
welcome. Yeah.
Very, very
Really
good.
appreciate it.
Yeah, yeah, we'll get some sort of system going on there. So Jeff, tomorrow, if you're around, mate, we will sort out the pound. Oh, by the way,
All right, buddy.
Jara, I think you're bang on the money. I wouldn't want to change that at all. I think your analysis is good, and I don't think you need Jeff and I really to suggest anything to improve that, particularly because
No,
you're
agreed.
logging it as well. Okay, so yeah, let's get out of here. Thank you so much for coming on as our guest for the day. We'll be back obviously on Monday as always. I will speak to you tomorrow, Jeff. Everybody have a great weekend. Stay safe in the market, and we'll do it all again next week.
Thank
All
you.
right, buddy.
Cheers.
what he said. Thanks, Gyra. Have a great weekend, guys. Bye-bye for
Thank
now.
you.